How did this real money live traded portfolio fare for the month of September 2023 and the years prior, as I continue to chronicle its life journey? We're going to get right into it and start off with the returns for September 2023 right now. My live traded US stocks portfolio outperformed by 1.8% by being down just 3.09% for the month, compared to the S&P 500 total return index being down 4.9%. A month is very short term. We shouldn't go making big changes to our strategy based on just 1 month's performance, regardless of how wide the comparison is in any given month, because we don't manage portfolios of stocks for a month, 10 months, or 10 years. It should be more like 20 plus years. Over the last 12 months to September 29, 2023, my rules-based US portfolio was up 31.05%, compared to the S&P 500 total return index, which was up 21.62%. A good year for the S&P 500, but even better by this rules-based real money portfolio that I've managed since 2016 as an open book for my customers to learn from. That's 9.4% outperformance by this open book real money portfolio. Now let's compare these two returns to a balanced fund. I will use the Vanguard Balanced Fund, VBIAX, which is where John Bogle, the founder of Vanguard, said for decades he had invested around half of his capital. In September, the Vanguard Balanced Fund was down 3.89%, a slight outperformance of the S&P 500 total return index, but underperformed my US-based stocks portfolio. Over the last year, the Vanguard Balanced Fund returned 11.55%. I will use VBIAX as a second benchmark for performance because it represents a 60% stocks, 40% bonds investing formula, which is how a massive amount of long-term money is invested for 401ks and IRAs in the United States and around the world for that matter. Now let's look at a chart comparing the equity curves starting at the same base date on September 30 last year between my real money portfolio, the blue line, compared to the S&P 500 total return index, the red line. The outperformance is plain to the eye. Over time, you want the gap to get wider between the blue line and the red line, although each will take turns of short-term outperformance. Coming back to comparing annualized returns, the S&P 500 total return index has slightly outperformed my portfolio over the last 4 years by 0.82% annualized, which I can live with, although I'm looking for meaningful outperformance. How did the 60/40 Vanguard Balanced Fund, VBIAX, do? Over that 4 years, its annualized return is 5.48%, which is some 6.72% worse than my real money portfolio. I remind you that the VBIAX Balanced Fund is not an equities only fund. However, it is a relevant benchmark for the type of returns that most non-active investors get with their long-term investments for retirement. The last metric to keep an eye on are the annualized returns since the inception of this real money live traded portfolio in January 2016, 7.75 years ago. My portfolio has achieved 11.09% annualized return over this period, compared to the S&P 500 total return index growing by 12.08% annualized. That's a 1% annualized outperformance over the index by my portfolio over the 7.75 years. In late 2022, early 2023, I did some tweaking of my mechanical buy-sell algorithm, which my customers got the benefit of too. After these tweaks, based on the historical portfolio simulation research that my business did, I look forward to my portfolio catching up to and overtaking the S&P 500 total return index over the coming months of years as measured from inception. What did the Vanguard Balanced Fund achieve over the 7.75 years? A 7.26 annualized return, which is 3.83% annualized worse than my rules-based US portfolio that we are chronicling in this playlist. Remember, past performance is not a reliable indicator of future performance. Please subscribe and click the bell to get notifications of newly published videos. Until next time, I wish you consistent and objective investing.